So we're now going to hear from Vince Molinari and hear his thoughts on some very interesting new approaches that he's putting together with others. Vince, thank you.
Good afternoon, everybody, and thanks for coming and listening to me. Don, thanks for the invite, and it's always a great honor to come to GW and chat with everybody, especially my daughter's a freshman here this year, so it gives me the extra excuse to have some good visiting time. I think I did you all a great service, and I left my thumb drive back at the hotel, so I don't have a PowerPoint to go through, so that means you can't check up on me, you see what I'm saying? So we can be a little bit more interactive along the way if you'd like to. So I think I am full of enthusiasm and with the great promise of things that are occurring, and we'll put it all under the veil of impact investing right now. And I think as we look at the globe, we look at the United States, particularly where some of the activity is coming from, the beauty of integrating technology as a solution set is creating great acceleration of information, knowledge, and data of what we like to call actionable knowledge. So there's been great pockets of information, great awareness created around social issues, environmental cause-related issues over the years. And what we start to hear repetitively time and time again, and I think Chris was great about it, and I was just saying I really enjoyed his presentation, and Rebecca's. We start to hear time and time again from the entrepreneur, the SMEs globally. Well, I need to find money. I don't know how to do it. And I have this theory, I have this business that is great business practice, it's commercially viable. What we would like to say first is impact investors. It has to be sustainable, therefore commercially viable. And next to that, it's delivering some amount of social, environmental good. And we'll get to measuring that in a second. The other side of it, we come back largely to the north, as Chris alluded to as well, and say corporations, institutions, ultra-high net worth individuals, family offices. We'd like to invest differently. We'd like to deliver capital for something more than the rate of return. But gee, we don't know how to find the opportunity. How do we move capital in that manner? So our approach at Gate Global Impact, by the way, I'm co-founder and CEO, forgot that little piece there, we have to give the company a plug. But Gate Global Impact took a different position of looking at technology and what we say creating new market infrastructure. We believe new market infrastructure creates new investment practices. And what are those new investment practices about for us? New ways to capture alpha and deliver capital for good. What we wanted to start to create was a matching system globally, so that opportunity could find capital, capital could find opportunity. So think about in a very base level, a stock exchange. Investors come to the exchange and they find the opportunity and they transact. Well, we've been missing that mechanism, that linkage of how that's done along the impact investing marketplace, or frankly, the alternative marketplace globally. So we design new technology, and again, there's some value in some of the screenshots that I can certainly email around to anybody that's interested. But if you start to envision companies coming to a centralized location globally to source capital and predisposed to having an environmental or social mandate associated with it. And what we found was, and I think some of the earlier anecdotes I think are right, where you maybe have to think about compromising a little bit of the rate of return was the initial thought. But I think what we're starting to see empirically through many investments globally is the rates of return are actually as good, if not exceeding, because they do represent, in a lot of cases, frontier emerging market rates of return along with the social good or the environment. So part of the next challenge is to say, well, how do you create measurement? We hear all of this wonderful talk about measurements, and everybody's starting to play with that a little bit. Our view is you have to start to create standardization and best practices at the very beginnings of the company's reporting when they're capturing or receiving the capital. And whether that's the base of the pyramid investment, mid-tier, or at the top of the pyramid, you need to start to have standardization so that you can truly begin to measure in an efficient way. Why? Because as you want to open up this environment of impact investing, at least from our standpoint, we want to start to add to philanthropy-based, donation-based dollars, right? Massive pools of dollars globally in our historic financial service systems that could be moved along. And it was a great slide by, that Chris had up there. $500 trillion of investable dollars. We can get to 500 billion in impact investing. Well, I think it's actually greater than that. When you start to, what I'd say, close that implementation shortfall between 500 trillion and $500 billion, how do you do that? Through systematic change over the long term and utilize on technology for display of information and data. Well, once you begin to be able to apply metrics and be able to say to a fiduciary, a portfolio manager, we're changing our mindset a little bit. Well, it's different than just saying, well, I want to invest because I want to do some good. They have a fiduciary responsibility to their portfolio holders, to their investors, to deliver a rate of return, but to do it in a manner that has some level of due diligence and some reporting practices. So now we can start to say, well, associated with that reporting practice, we can now measure the metrics. We can define the level of good. Now it's not just a pat on the back. By the way, you did some good because you deployed capital here. Here's how much clean water was delivered. Here's how much housing. Here's how much education. You start to change what we say is the investment practice and the flow of that capital. At Gate Global, in fact, we've done a couple of really neat things, and I think we've tried to standardize and become the first with a pathway vertically through the impact investing pyramid. So we do lots of great things that we're looking at the base of the pyramid, the entrepreneurial SME level. And we heard the conversations about diaspora, right? People want to give back to their community. They want to, particularly with levels of origin, country, village, how do we help our own community? Because I've been fortunate to have some level of success financially. Well, don't know how to do it. So if we can start to target and utilize technology to pockets of affinity groups along diaspora lines, great value to be able to drive that capital for a specific purpose. We talk about it as crowdfunding, right? Crowdsourcing. Historically been around the donation on the perk basis. Here in the United States, I don't know if anybody is familiar with the Jobs Act. Great. Douglas, thanks for coming. Yeah, we'll forget about DJ. Take a look at it. The most innovative changes in U.S. securities legislation in the past 8 years. Title III, as it's called, crowdfunding here, talking about the aggregation of individual dollars in the form of a security, and that security could be equity or debt in a company. So taking the best of what was kind of crowdsourcing or wisdom of the crowd, and now implementing it towards the financial service business. Major change. So aggregating that at the base of the pyramid. Title II, I think the most meaningful change that we've seen in 80 years here in the United States. For the first time, the ability to advertise a security. You couldn't advertise, you couldn't generally solicit a security offering a private security. Well, when you think about what does that mean, for the first time you can advertise radio, television, print, and this little thing called social media. So I think we're under a huge paradigm shift here in the United States that I think is going to take greater hold globally in the ability to efficiently and very cost-effectively distribute securities. Now, when you put impact investing around that, you've now created that new investment paradigm to teach people that you can actually invest, have a sustainable rate of return in a commercially viable company, and deliver social and environmental good. We talk about the millennials. Demand that's coming from the base, where stakeholders are becoming consumers, consumers are becoming stakeholders, and they're demanding transparency. They're demanding transparency of supply chain. They're demanding greater corporate practices. The earlier evolution I'm going to steal your slides because they were great. Talk about CSR, right? Because the CSR was a little bit more branding that we're doing something about it, but now they're really taking hold, and there's accountability. And the shareholders and consumers are beginning to vote with their pocketbooks. And that is going to affect sustainable change, not only at what we say is the base, but up at the top level, right? It's a systematic change of reporting and accountability. We've done a couple of really neat deals, partnerships at Gate Global Impact. One with through the State Department with the Overseas Private Investment Corporation of the U.S. government. We've become an EDN originator and Enterprise Development Network originator. So we're sourcing deals globally to come through our system to bring into OPIC for seeking funding, creating that efficiency, and really neat mandates from OPIC to invest in U.S. companies that are expanding and have a mission overseas to job create, infrastructure, and all kinds of other great practices. But why are they doing that? They're doing it to create opportunity globally job creation both stateside and on the ground in foreign countries, particularly emerging countries. What's really neat about that, when we talk about some of the hurdles that are out there of political risk, country risk, some of the instability, these are market conditions where a lot of commercial capital isn't going. So if you can bring an open organization in, well, you also offer country risk and political risk insurance to wrap around those investments. So we're seeing that at the top of the pyramid. We were very proud, I guess it was 4 weeks ago now, United Nations Global Compact has established a whole set of verticals called action hubs: clean water, clean tech, women empowerment, and really aggregating issues or issuers and people interested in those categories. But what were they missing? The ability to transact. We became the partner with UNGC on their action hubs to be their global execution platform. Why? Because we are a securities business. We have best practices, we have investor protections. So we're really looking to evolve the space to one that is a permanent investment practice that speaks to what we would call capital formation versus capital raising. Capital raising, kind of the act of raising capital, but capital formation, the ability to encumber and put into the process information, education, and investor protections. Again, when you layer that all with practices around impact investing, we think that is the future and the way that investment is going to occur. We've done a couple of neat new verticals. One that we announced 10 days ago called Gate Women, focused on Maria Bello, who is a wonderful actress, but aside from her abilities as an actress, a huge women's advocate globally, continent of Africa for 20 odd years, Haiti. She's heading up that group for us, along with Claire Munn, who is a historic technologist and communications expert, really creating that independent hub where female-led, female empowerment organizations can put the opportunities to seek capital. Jeff will talk about what we're doing in tourism around GATEtrip, so I won't go into that too much because he actually has slides. Now what we're doing another really neat that I think you're going to hear a lot about, what's historically referred to as TV white spaces. And it's the ability to deliver broadband internet on the old analog television frequencies. We call it Impact Wi-Fi. We're doing work in Kenya right now, along with Indigo Telecom and Microsoft, and closing the digital divide, bringing rural communities internet access. And we think that is paramount to closing the poverty, lifting the poverty level up by bringing education, again, more health care, and really the beginnings of commercial opportunities within those regions. My great prep sheet here. I'm going to make sure I didn't miss anything on here. I think it's one of the big things to talk about as you think about. I have a great education from Hyman this morning of what it means to not have a job and call myself an entrepreneur. But as you think about it, there's huge opportunity in this marketplace that everybody's referring to as social entrepreneurship. It is a virtual green field of opportunity when you think about the abilities to incorporate new ideas and have the ability to look for capital associated with that, to affect change. People are becoming so much more conscious of what's occurring globally. And when I say globally, we're talking about rural communities, but we're talking about the United States, established marketplaces that have pockets within it that need opportunity, that need a level of change. And I think part of our global financial meltdown over the last several years has really been a resetting of perhaps some principles, some rethinking of what it means to be part of that social ecosystem that Ayman talked about, to be the ally, and that extended allies becoming more, I would say, broader in its nature, by the utilization of technology, social media, to now know very quickly what we didn't know, what may take a week or a month in dissemination of information that's transmitted globally on a real-time basis. I think that is closing the gap of timeliness, communication, and awareness that is going to continue to affect more and more change. So I, as the CEO of Gate Global Impact, couldn't be more excited about the opportunities that are out there now and our abilities to communicate and effectuate change and do it in a sustainable manner. So I know I'm butting up against a little bit of a time window, but
Let's give them a big hand, but. Plenty of time for questions. Anyone?
Don't you think it makes some sense to do the next
Would you like to do
one?
that?
Rather do the two
Okay,
questions?
well, Jeffrey, you know,
I don't want to be. He shows me up every time. That's the problem.
That's why you go first.
Jeffrey suggested that maybe he would present, then we get combined. Does that make sense? Does anybody have a burning question though for Vince before we do that? Okay, let's get one question. Yes.
What's the definition of crowdfunding? You went over that fairly fast, and I've not understood
I'm sorry.
what that means.
So crowdfunding in a historic sense, certainly in the U.S., lots of the UK, I'm going to say generally accepted practice globally, is a crowdsourcing model where funds are delivered to a company, but not even in a corporate structure, more as an entity that is trying to create a product.
It's just like people give $100, or is it?
It could be any amount of money, but you're really getting a perk. You may getting almost a pre-sale of the product. It may be donation based that you're granting, or just giving with no expectation. Maybe you're getting a T-shirt back.
It's not a loan. It's a,
Not a loan. So different than a microfinance kind of mechanism. So the evolution of that in Title III of the Jobs Act is what many people like to say the democratization of capital formation. The ability now to aggregate those smaller dollar amounts and solicit that, but in return, instead of giving a reward or a pre-product, owning a share in that company, or being part of a debt instrument that wasn't permitted previously in that company.
so do financial institutions get involved with soliciting, or is it just little tiny projects that people are putting on the website?
So it is designed really for what I would say is the entrepreneur or smaller business. So the cap on aggregate capital that could be raised in a 12-month period under crowdfunding is $1 million. So it is not a mechanism that is designed to raise $5, $10, $20, $30 million. And there's a cap on the individual investors of what they can invest in an annual basis across crowdfunding opportunities. And that's just, let's call it roughly $3,000, and there's some other parameters based upon net worth where that could increase.
Tax deductible, or?
No. So it is a true investment. So you are at risk. You are in startup, and we talk about this as fraud versus failure kind of mode. This is high risk investment. You're investing in a lot of startups, but there are some established companies that can't find bank financing, that aren't in a geography where there's lots of capital market formation. So there is a bit more mature companies that'll be seeking. But we think largely it's going to be a $500,000 and lower kind of aggregate, because there's some reporting and audit costs that kick in above $500,000 that may be prohibited.